YieldMax, the Target 12 Semiconductor Option Income ETF. They're showing 10 to 12% targeted yield, SOXY. Well, we know YieldMax, we know the negatives, we don't hear many positives. So the question is this really a fund that we want to do? Or is this really just yield chasing again, trying to get 12%? Hey everyone, it's Doug the Retirement Guy with all your monthly ETFs. And today we're going to break down one of the most interesting funds that I have found in a while, and that is the YieldMax Targeted 12 Semiconductor. It is a targeted 12 program, which gives you a target that they're trying to achieve a 12% yield. Well, one of the big things I don't chase yield. I want to look at total returns. And that's what makes this fund so interesting. So let's get deeper into it, show you what's going on with the targeted 12 semiconductor from YieldMax. And again, is it a good fund or a bad fund? As we both all know, YieldMax has got a bad rap. They got a bad record behind them. So is this really a good fund to invest? We do have to do the disclaimer, and that is past performances don't guarantee your future results, and this information in this video is for educational and informational purposes only. I am not a licensed financial advisor. I am just one who's been studying this stuff for years. The example and suggestions discussed here are basically not suitable for all individual situations, so always contact a financial advisor before making financial decisions. So breaking down the YieldMax Targeted 12 Semiconductor Option Income ETF, better known as SOXY. So SOXY, like I said, this comes from their package of what they call Targeted 12, which is they're targeting a 12% yield. The fund is actively managed and it targets an annual income level of 12% by investing in U.S. semiconductor companies while employing a covered call strategy. So very normal type application, but just that its magic word is target, which means they're going to try to do everything they can to get 12%. But remember, 12% and losing 10 is only a 2% gain. Getting 12 and losing 24 is a 12% loss. So I know I'm sounding negative up front, but you got to know up front with this is that the target of 12 is just a target. It's not guaranteed. It's not written in stone, but they will do everything they can to get you this. Now, here's the next thing I come back with is the gross expensive ratio, 1.06%. 1% to get a 12% yield back is extremely high. And that's the first negative I can see is that a 1% cost to get 12%. So realistically, you're only generating 11% income because you're paying that 1% off of it. So we find other funds that pay 12% that have the fees a lot less. So right off the bat, I'm going to say, a little negative to it. But let's dive deeper into this one. $36 million in net assets. This thing came out December 2nd of 2024. So realistically, we're a year and I'm going to give it a year and 4 months old. 500,000 shares, which is very small for a YieldMax fund. Normally, these things are up to over 1 million shares. Distribution rate 9.15%. Based off of the information that's currently going on now. So that number, like I said, yields will always change. That's why I don't always watch yields. Yields will change throughout an entire day because as the price goes up, price goes down, the yield will change. It does pay out monthly, which is another positive. And here's the thing that's going on. The fund had a low of 37.81 and a high of 75.50. So we are banking in that highest range right now. Which I'll give you a positive is a lot of the stock market is getting to its top end. The question is, how much higher will this go and will it continue to produce the income? Now, what will really blow your mind is the 1-year results. 89.68% in total growth of the fund. So we're not even talking about the yield right now. We're talking about actual natural growth. I don't know if those words ever get together with YieldMax, but this one is doing it. 89.68% total growth in the fund. So this is saying the fund is definitely achieving what it's looking for. They're looking for income, giving you that 12%, but they're now getting growth on top of this. So it starts making the fund, and why I said it was very interesting to research, because the fund is showing positive, strong growth. Now the question is, can it continue long into 2026? It's showing at the start it is, but can it continue at these high rates? When we take a look at the holdings that they're doing, it's 71% technology, 28% other. We look at the rankings up here and we'll see NVIDIA, Broadcom, we see the Marvel Technology, Lam Research. So a lot of technology companies are all in the semiconductor package. At the very bottom, AMD. AMD is one of the strongest companies going out there in the chip market. They've been the ones challenging NVIDIA for dominance, but look where they're at. They're a well-balanced machine across the board in this particular fund. Now this starts explaining why we're seeing good solid growth and we're seeing some decent income. When we take a look at the charts, first we'll do the dividend chart. You can see the dividends are between that 40 cents and 65 cents. They're well balanced in there. And you can see since July of last year, they have slowly tracked it to a higher number. We give you all the X dates and all the cash payouts over the past basically 12 months. And what we see here is we're seeing it into the high 60s now. It started off in the I'll call it the low 40s to the mid or starting of the 50s, and then rolled right into the 50s to the 60s, and now it's going from the 60s and going higher. The performance. I always do these backwards. I know different people make comment to it, but since inception, this fund is up 51.68%. Now, this is your distributions and your growth all built into one. This is your starting of your total returns. 1 year, 114.67% because of the growth it had over the past 12 months. But now we dial this thing in a little closer. Year to date, it's up over 30% so far. Over the past month, up 18.6%. So these are some rock solid, hardcore numbers. I don't think anybody would argue if the year ended today and you got 30% growth in this fund. It's that strong of a fund. Now, the question, though, I have across this, are we hitting our peak or is it actually going to go even higher? So when we take a look at the true hardcore, the return, total returns, this is what I always look at when I'm looking at a fund to invest into. I want to see what the actual total return comes out to be because this is the true hardcore. We see a lot of funds that will be great income, 30, 40, 50% income. And when we get to the total returns, we're seeing the complete opposite. We're seeing 20, 30% drops because it doesn't hold the value. That's called NAV erosion. Okay, the NAV, the net asset value, is declining to pay you out. Well, this fund does the complete opposite. Is in 30% growth over year to date, which is what, about 3.5 months so far. You can see since March, this thing has rocketed. Basically over 25% growth in since the March in the month of April. Before that, the thing was still bouncing in that 10 to 15% range. So we go to the 1 year, we look at the same track history of 1 year, up 114.67%. These are unbelievable numbers. You are literally 100% doubling your money in that 12-month period. So this is why I start questioning, is it going to stay? Will it continue doing what it's doing? It's finally a one fund that YieldMax is actually doing right. So when you add in the distributions, you add in the natural growth, you have a fund that's actually producing the way you want it to be. So we take a look at this one. You can see right from October of 25, it started its climb and started just slowly creating its mountain. Nothing as crazy as it's going right now. So that's why I'm like, hey, this thing is probably good for a good 60 to 80% growth over a year. It's throwing out the 114. So everything checks the mark saying great fun, great fun, great fun. So the question is it good for retirement? Well, honestly here, this one throws you for a little bit of a loop. With the growth numbers, I actually would put this in my growth category. Okay. I'd put this over there. Now, getting 12% yield, it could move to the income side, but I'd rather put this in my growth side because of the big number of growth potential. And if I get the income, well, you know what? Drip that back into the growth to make up for any losses or huge increases. Like you see here, if you did it this year, dripped everything through, you'd have 114%. You would have doubled your money easily over this period of time. Year to date, you're still, in the past 4 months, you're still up 30%. This is where I say you'd be happy to have a 30% growth. So for me, is this a fund that you want to have in your retirement fund? If you're not into technology, if you're not into the chips, definitely something that to look at to say, hey, I would like some growth in my fund. Maybe it's a 1 to 3 year portfolio change to just get the some of the growth coming out of it. That's how I would play this one. So tell me what you think. What's your thoughts? I know YieldMax is not the greatest name in a lot of categories because so many people got hurt and burned by all their weeklies. But when we're sitting here looking at a 10 to 12% targeted yield, that's what a lot of people look at. When you look at total returns and getting the big numbers, I'd love to have your opinion. I know take out the YieldMax attitude, but if this was Doug Max or Doug something and the target 12 semiconductor, what are your thoughts with the numbers we showed you? Leave a comment down below. Don't be afraid to hit that like button.
Thank you for watching. Press the